Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his good friend, Mr. Dan Bird. How you doing, sir?
Good morning. I'm freezing here in
You're
Florida.
What's it like, 50 degrees or something?
51.
Oh my goodness. Do you even have a jacket anymore?
It's bone chilling. I have
51.
one jacket. I played golf yesterday in this weather, and I wore the jacket the whole time.
Oh no, that's not what you paid for, right? And remind people that
I
don't
know.
Where were you before you moved to Florida?
I was in the DC area where it's like 22 degrees right now.
Yeah, you actually had a couple of coats in DC.
Oh yeah, quite a few.
You just left them behind.
It's so cold here. We're talking about moving further south, like Costa Rica or something. Cartagena.
Cartagena. That's amazing. That's amazing. Well, hey man, you've been helping me learn a new skill. I've invited you on the channel. Thank you for doing this every week. We are going to review in video number 2 all of my stock trades using technical analysis. I have lost money on every single trade, but there are so many things that I actually like about what I just said. I want to review them. And then like always, we will bring up the account, show people what happened. But before we do that, I want to thank you for being a part of this, and thank you for helping me feel better about this.
Yeah, you bet. You know, I do a newsletter. It's free for anybody that wants to subscribe. And I mentioned the last couple of weeks that the market was headed down. So it really wasn't a good time to get in anyway, but it was a good time to experiment.
Yeah. Yeah. And a couple of things I want to just highlight that is very different, right? People that are on my channel know, and you know, I was a pretty active stock trader back in the .com craziness, made a lot of money, lost a lot of money, and was frankly an emotional trader. Emotions in trading is not good.
Right.
And so what have we done the last couple of weeks? We have used your risk calculator to right size some trades. We've done a couple of things that I'm just so happy about. We were setting up trades to ladder into a position, right? We chose to do it.
While you're talking about that, I'm gonna share and actually show the calculator.
Okay, cool.
We won't fill anything in, but at least.
Yeah, so people see it. And if folks, again, Dan has his entire playlist, go back and watch him. We are doing this every week. We use this calculator right here on my portfolio, which I just moved 25K or so into an account. We picked the stock based on macroeconomics, which I'm very comfortable with. Then we found stocks to put positions in. Dan helped me right size them. Before, what would I do? I'd say, oh, I want Wells Fargo. I'll go buy it all in one time. Dan's like, no, you idiot. Go into the position, set them up right. So he's helped me control the risk, which is all a part of this risk calculator. And then most importantly, we've established stop losses so that I have gotten out. These stop losses have helped me save thousands of dollars. So yes, I've recognized 3 losses, but those losses have totaled, I think 2 of them were $75 and one of them was 100 and something. So again, right. I feel really, really good about this. So Dan, I just want to thank you because I know if I was doing it on my own, I would have done one of 2 things. I would have talked myself into saying, oh, it'll come back, don't worry, blah, blah, blah. Or I would have sold everything at one time. So this risk calculator in really trading has been been fun to do. So thank you.
Yeah, you bet. I mean, you're talking about right in through here is a stop loss. This calculator, you need to understand your exit before you even use it. So you have to know what your stop is going to be, and you have to stick with it. That's really important. You don't set a stop loss and then start moving it. Yeah. Set a stop loss and leave it.
Yeah.
And then also the scaling in down here on the ones that we did, we scale in at 50%. So you can adjust these with that, whatever you want. But in your particular case, we did half a position in those stocks. And that meant that if it went down, we only lose half the position.
Exactly.
If it went up, then it means our thesis was correct. And then we could buy more because it's proving itself. Yeah. But if it doesn't prove itself, then we don't lose as much.
Yeah. Go back to some of the earlier videos with Dan where he talks about 3 rules of thumb. Right now, I'm still in rule 1. I am losing money, but I'm learning along the way. So Dan, something I did is I sent you 2 stocks I wanted to look at this week. I sent you, I think it was Costco and Lockheed Martin. So I was curious if you could pull those up.
You want to look at the 3 that you're stopped out of now?
Yeah, I mean, you could show people if people want proof that I lost money, they can see proof, sure.
Yeah, and the 3 that we did was Wells Fargo was one of them. Yep. It stopped out 20 shares, so that was only half the position, 53.92, and we got in at 57.50. So roughly about $3.50 times 20 shares.
Mhm.
Here's what Wells Fargo looks like. So we got in up here. We probably got out about right here,
Yep.
and it continued to go down. And as you can see with the way this looks, it may still continue to go down even more.
Mhm.
The other one was Regions Financial, another financial company. Same kind of thing. We got in up and around in here. We got stopped out about here. And you
Yeah.
can see it actually gapped down, and it may still, again, continue to fall further.
Okay.
And then the other one was Ford. Ford was a darling of lots of different hedge funds and institutions. You can see it was heading up from down here around 13, 12 or 13. I actually got in at around 16, or right when it gapped up right here,
Okay.
and held it all the way up through here. Now you got in at the high, but we had a stop loss, and again, it was only a half a position.
Yep.
So for Ford, it sold at 23.21, and you got in at 24.90. So it's about $1.50 times $50, or 50 shares rather.
Yeah.
$75. But the important thing to notice here, I had my stop loss set up here at about 23, and I got in at 16.50.
Nice.
So I made about 20% on this, but everybody that loved Ford thought it would continue up to the moon. And they may not have had stop losses, and they didn't get out right in here.
Yeah, I hate that. I mean, one of the things, again, I'm learning a new skill. You're helping me with this, is the stop losses are so important. I would either love or hate my stocks, right? And I would waffle all the time. So helping me set this up. And again, I don't look at the stocks except on Saturday or Sunday when we talk. It's just, I have the orders in. If it fills, it fills. If I get stopped out, I get stopped out. This is so much better. Before, I would wake up at night, I would not sleep. It would be so stressful. So this is such a better way to do it, at least for me.
Yeah, absolutely. And the worst thing you can do is fall in love with a stock.
Oh, yeah.
We'll talk about that in the next session when we talk about Netflix. But
yep, folks, just so you know, pay attention. In episode 3, we're going to break down Netflix, and this was part of Dan's weekly newsletter, but we'll just tease that for episode 3. Sorry, Dan.
No problem. The two that you sent me to look at, one was Lockheed Martin. Lockheed Martin has done really well. They're in the aerospace and defense.
Yeah,
sector.
and just so people realize, I always start this at the macro level. One of the things that I see out there, obviously, is Russia potentially invading Ukraine. And if that happens, could, other conflicts arise? That's why I sent you Lockheed Martin.
And by the way, China could invade Taiwan at the same time.
Oh yeah, yes.
So not a bad thesis. The only problem that I have with it, number one, this is another platform that I use. This is actually Investors Business Daily. This is their charting platform.
Okay.
I actually had Costco up, but let me change this to Lockheed Martin.
Okay.
And one thing I like about it is it tells you when earnings are coming out. So you can see earnings are due on the 25th.
Oh, yeah.
Right? It's only a couple of days from now.
And
it does show you what earnings did the last few times. So went up 11, up 16, up 10, up 22, which was nice. It also shows you where the earnings were last time.
Yep.
And it's right there. So the first red flag on this is the earnings are just 2 days away.
Got it.
So highly risky to buy something just before earnings.
Okay.
Even with your thesis.
Sure.
That Russia could invade.
Fair enough.
They probably won't invade by
Tuesday.
What is this, Tuesday?
Yeah.
25th. So you might want to wait till after earnings to see how earnings did.
Fair enough.
The other thing to look at here, this is what happened the last time they had earnings. Now you notice Lockheed Martin likes to run up into earnings. Nice run up right there, which is what they did this time. But look what happened right when they announced their earnings.
Yeah, that's not a pretty picture.
Huge drop, and that could happen again. And we're right at resistance right now as well.
Okay.
So all the people over here, they get trapped.
Yep.
When this happened, are just waiting to get out or break even over here.
Yeah.
Right. So that probably a very highly risky trade to put that on before earnings.
Okay, I will pass. I do not need any more risk.
Right. So Costco, on the other hand, Costco's
Ooh.
already had their big dump along with the rest of the market. All of their indicators are extremely oversold.
Interesting.
See all these down here, they're all near the bottom.
Mm-hmm.
These are oscillators.
Yep.
So they're very oversold. We'll talk about this some more when we talk about Netflix.
Interesting.
And then if I go over and look at when earnings are due for Costco and what their previous earnings were, the Costco's earnings aren't until March 3rd.
Interesting. Okay.
They've still got a ways to go.
Mm-hmm.
The last earnings was up 13%, up 7%, up 20, up 21.
Mm.
So they've been pretty consistently beating earnings, not
Right.
by a huge amount,
Mm.
but pretty consistent. So they've run up and they've come back down along with the rest of the market. So I think it's really going to depend on what the rest of the market does.
Mm.
But overall, Costco is a good company. And I think the biggest thing when they come out with their earnings in March is not so much what they've done the last quarter,
Yeah.
but what do they say about what they think is going to happen the rest of the year?
I think that is true for everyone who reports going forward. I've said on my channel that Q4 is going to be a barn burner, but it doesn't matter. It's the rear view mirror. What are people talking about the future? Is the consumer tapped out? Are they getting nervous? There's so much stuff going forward. So I think at this point, I'm going to do nothing this week.
I think that is a wise choice. I'm actually all in cash myself right now.
Oh, look at you. Okay.
Ford was the only one I had, and I got stopped out of that one. So I'm all in cash at the moment as well, which is probably a good place to be.
Yeah, very, very cool. So why don't you stop? Oh, go ahead. You want to
hey, let me do one more thing first,
please,
just to talk about the macro a little bit. First of all, the VIX. Here's what the VIX looks like. I know you might not understand what this chart's telling you, but
not even a little bit.
The VIX is the volatility index or the fear index. So the VIX shoots up when the market goes down. The market's gone down a lot. You can see it down here. This is the S&P. You can see how it shot up in this little gray area to over 30 back in December, but the market did not go down as far as it's gone down right now.
Interesting.
But yet the VIX is not as high as it was in December, which implies to me that there might be still more downside left.
Makes sense.
Okay.
Okay.
So there might be still more to go. This is a chart that I use, and I know it's really busy, but like we talked about before, yeah, I know French, so I understand what you're saying.
Exactly. That's what I'm trying to learn.
I call this my bottom finder. So all of these blue lines you see here are where the bottom was previously.
Okay.
And this gray area is the number of stocks over their 50-day moving average. So you can see this is coming down. It's almost to where it was before, but not quite. These down here are very oversold, all these indicators. So it's getting close to a bottom, but I don't think it's quite there yet.
Okay.
What I'm expecting to see on Monday is a huge dump in stocks Monday morning.
Kind of like an open?
At the open.
People who were afraid over the weekend, they grounded on it, they lost sleep. Sell, sell, sell.
That's right. Not only the weekend, but all week last week.
Right.
You can see right here, all week this thing was going down. But it is so oversold right now that I think we're due for a dead cat bounce.
Dead cat bounce. Tell people what that is.
Dead cat bounce is where the market bounces and it comes back to some level and everybody thinks that it's going to rally and then it starts down again.
Could you call that a suckers rally as well? Or
yeah, you could call it that.
Okay.
I actually had it in my my newsletter. In fact, well,
we'll bring the newsletter up in
about that
episode
later.
3.
Yeah, that's fine. But what happens is there's something called a reversion to the mean. All right. So what this chart here is showing is this is the S&P, and these are the average true range channels. The average true range is the range that a stock trades in on a daily basis. So this first dark gray area is one true range. So this is 1 day's range.
Oh, okay.
The next layer is the 2 times the average true range. And then the light gray is 3 times the average true range. So you can see when it gets to those extremes, like here, it likes to come back to the middle.
Okay.
it reverts to the mean, which is this dotted line right here. So down here, it went down to 2x ATR, came back to the middle again. Went up here, it almost touched the 3x, came back to the middle. Right now, we're well beyond 3x. We are extremely oversold right here. And that's why I think it's probably, if it sells off Monday morning, it's going to probably rally back, and it might have a dramatic rally on Monday or Tuesday. And the back to the mean is right up here where the circle is. So it theoretically could come right back up to this area in 46.50. But if it does, that's a good time for people to get out if they haven't gotten out. Don't think that it's going to keep going higher, because it probably is going to get rejected here and start back down again.
Wow. Yeah, this, folks, again, technical trading. Dan has a PhD. I'm still not even in kindergarten yet. Maybe I'm in preschool. Lots here. Remember, episode number 1 gave you 3 book recommendations. Again, if you're going to go on this journey with me, you need to buy some books, start learning, go back and watch the playlist. Dan, any other closing thoughts before we get to your newsletter and looking at Netflix?
Nope, that's it. What we're going to do with Netflix, by the way, I encourage people to watch that because it's kind of a primer on technical trading. I'm going to go through step by step in real time where the warning signs were on Netflix. If anybody saw Netflix on Friday, I mean, you'll see what it did. It was not pretty, but the warning signs were all there. None of that kind of move that Netflix made should never be a surprise.
Ooh,
all the warnings were there. So I'm going to show you where they were.
Very cool. Thanks, buddy. I appreciate it.
Okay.